What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Weeble is going to give you up to 12 free stocks. When you open a new Weeble brokerage account, put at least $100 in that brokerage account. They're going to give you up to 12 free stocks for just trying out the brokerage app. There's a link down in the description box of this video. Click on that Weeble link. Open up your new Weeble brokerage account today. Go get that free stock. Go get that free money. Next week, guys, we have a pretty big meeting that'll be taking place on January 31st and February 1st. And that would be the Federal Reserve meeting. It's widely expected in that meeting, the Fed will increase short-term interest rates for the 8th time, and that includes all of 2022 and the first month in 2023. That's historic, man. 8 consecutive rate hikes. But in this particular rate hike, it's only expected that they're going to increase short-term interest rates by 25 basis points. Now, the stock market already has that priced in. So we won't see a big rally or sell-off if the Fed sticks to what the market believes they're going to do, which is the 25 basis points. Now, if the Fed goes off and does 50 basis point rate hike, then yeah, the stock market really is going to take a hit. And all the gains that we made over the past week or so, we may lose those gains if the Fed goes off course and raises short-term interest rates by 50 basis points. Now, I don't believe they'll do that. And the reason I don't believe they'll do that is because we've gotten 3 consecutive months in a row that we've had inflation coming down. October, November, and December CPI reports show that inflation is coming down. Also, the PCE inflation report shows inflation coming down, and that's really the one the Fed measures and sticks to and really gets their guidance from, is that PCE inflation report. So on all counts, inflation is starting to come down. And the Fed increasing short-term interest rates all of 2022 has worked, which is a good thing. The only thing, though, the Fed is still waiting on before they give us a clear signal that they're going to start reducing short-term interest rates, they're waiting on the labor market to cool off. And the labor market has been pretty stubborn. One of the reasons it's been stubborn is because of the service industry. See, over the last 6 months, last year, the service industry has really taken off, right? People are starting to travel again. People are taking vacations. People are wanting to have leisure activities. For a couple of years, people have been pent up due to the pandemic. So now, hey, why not get out and enjoy life? Anytime you have more jobs than you have enough people to fill those jobs, typically what happens is companies tend to increase the wages in order to attract people to fill their job vacancies. And that's really the reason why the labor market is still so hot, is because of that reason there, that old supply versus demand. If we can get the labor market to soften, not to the point where we got this huge layoff of people and that makes the economy even worse. That's not what they're trying to do. They're just trying to take the edge off of the labor market so that it's not as It's not increasing wages. So if we can have just enough job openings and just enough people to fill those jobs, that's where they want it. Because what that does is it keeps wages stable. We also don't want, we have a lot of people who are looking for jobs and we don't have enough job openings. What happens then? Wages go down. That'll affect the economy as well. So we really want that happy medium where we just got enough openings, we got enough people to fill those openings, and it keep wages stable. That will bring prices down, and that will get us back to price stability in our economy, and it will get us back to our 2% inflation where we want to be, and everybody's happy. And if all of that happens, the stock market is going to start going to the moon again, and that'll start the next bull market, which I believe that's going to happen sometime in 2024. I don't believe it's going to happen in 2023. I think the market will do well in 2023, but I still think it won't rebound and get back to, fourth quarter 2021 numbers. Those were good times in the stock market, right? Now, I believe what we should be doing is dollar cost averaging into the stock market now through ETFs and index funds, but not just any old ETFs or index funds. You guys know I've been telling you guys in every video, S&P 500 ETF, S&P 500 index fund, and then total stock market ETF or index fund. Those are the two you want to be dollar cost averaging in because you don't have to be the expert, right? You want to lean on companies like Vanguard, who has these funds, these S&P 500 funds and this total stock market funds that when you look at it historically, they have been very, very good at multiplying money for investors. That's where you want to be putting your money at, because although we had a really nice rally last week in the stock market, things are still severely discounted. You know, our favorite companies, our favorite ETFs are still trading at a discount, guys. We can still be picking these companies up for undervalue right now. And all we got to do is be prepared to hold them until the next bull market. Like I said, I believe that happens sometime in 2024. But for me, though, I'm a hold mine for the next 3, 5, 7, 10 years. That's the kind of investor I am. You don't have to be that kind of investor. You can buy and sell whenever you want to. But if you want to build wealth, the goal is you want to buy assets where they're trading at a discount, and then you want to hold those assets to they're trading at a premium. And that's where you make your net worth, right? And I think the stock market will provide us that if that's the direction you want to go. You may not want to go that direction. You got to figure out a direction, though, because if you're going to build wealth, you need assets. So you got to figure out what assets you're going to buy. Personally, I'm going to buy paper assets right now. And then at some point in the future, if the real estate market presents a good, attractive opportunity to buy investment real estate, then I'll start buying them too. But right now, that's not a very attractive investment for me. One, because what? Your 30-year fixed rate mortgage rates are through the roof. So if I got to go out and borrow money, which I would do in order to buy a rental property, I'm going to be paying 6% interest rate. I don't want to pay a 6% interest rate on debt unless I'm making a crazy net return on that 6%. I got to be making somewhere in that 15 to 20% return on my money in order to minus out that 6% interest rate that I'm going to have to pay and for it to make sense. So right now, since I'm the type of investor in real estate that I borrow money to buy my real estate, I don't pay cash for real estate. I borrow money. And right now it's too expensive to borrow money, so I can't put my money in real estate at the moment. So I'll put it in paper assets. And I also put it in my business. You know, I put it in paper assets and I put it in my business. So you got to figure out where you're putting your money, where you put your money to multiply. Drop me some comments down in the comment box and let me know, where are you putting your money to multiply it? If you want those 12 free stocks from Weeble, guys, go ahead and click on that link down in the description box. If you're going to invest in paper assets, you need a brokerage account. And Weeble's going to give you 12 free stocks, up to 12 free stocks for just trying out their brokerage app. All you got to do is put $100 in your investment account, and they're going to give you up to 12 free stocks. Then you got an account that you can start buying paper assets, if that's what you want to put your money in order to multiply it. If you're stopping by the channel for the first time, please consider subscribing, share the video, and smash that like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.